Hello, and welcome to the Deal Breakdown Podcast. I'm Wesley with Maton Real Estate, your buyer specialist.
My name is Phong Tran, your sales specialist, and I'm with Tran Property.
And together,
We are the Deal Breakdown.
Welcome to episode 7. We are circling back to our current event episode where we talk about current events that affect the real estate market. Oh, of course. Who isn't? When this is coming out, obviously, we're going to be talking about something big. But we're going to start off with something, I think, a little bit maybe smaller. I don't know. But Phong, I would like to hear about your current event.
Oh, okay. So I'm going first. So in Salem, which is the capital of Oregon, they recently passed a bill that now allows landlords or any homeowner to evict squatters.
Whoa.
Yeah. So, and the bill was unanimously decided on. It's passed. I don't know exactly when it goes into effect, but now you can provide these squatters with a 24-hour notice to evict these squatters. Before this bill was passed, it usually takes many years, months, and a lot of legal fees to even evict a squatter. Now, what is a squatter? A squatter is someone that lives in a house that wasn't allowed. An example is maybe somebody finds an abandoned house, lives in it, and then usually after 10 years, I believe it's called adverse possession, 10 years, they can legally now own the property. And so this does away with the whole process. And so this is actually a really nice benefit to landlords and owners because it doesn't just affect landlords, it affects owners as well. And yeah, what are your thoughts on that?
Well, I have some clarifying questions first. So you said Salem. Did you say that just because it's only in Salem or because it's the capital and affects all of Oregon?
It affects all of Oregon. And since Salem is the capital of Oregon, I think that's where they meet and pass bills and whatever. I don't know exactly the political stuff of that. But yes, it affects the entire state of Oregon. And we know that, especially living on the West Coast, we typically lean more Democratic. And usually the blue states, West, don't typically favor landlords. That's why the majority of investors, retail flippers, landlord, like tenant properties are typically done within the red states because they typically have less lenient rules and restrictions and whatnot.
Yeah, it's certainly here in Portland. I'm sure it extends down to Salem and Eugene, the 3 major cities here. It is very tenant friendly, or in this instance, squatter friendly. That's wild. So before I get into my thoughts, first off, just to explain, yes, we have a state Congress. We have a state, so that means we have a state House, state Senate, all that jazz. We have a governor, if you didn't know. Oh, wow. It's our executive branch, and then there's the legislative, like I said, the Congress, and then we also have our state judicial system, right? Supreme Court justices. So we do have, obviously, statewide government, and how laws basically work is state law. We'll see how this actually stays in the next couple of years, but the state law always cannot supersede the federal law, but you can hone in a little bit more. A great example would be the minimum income. The federal minimum income is $7.25. It can be up to the state to go further than that, right? And they could go to $10. However, the state cannot say $5, right? Because always the Fed will supersede the state.
Absolutely.
So that's just kind of how that works. So this is interesting to hear, obviously, from real estate, being that squatters are certainly an issue here in Oregon.
It's been an issue, and I mean, I hear it especially from like people I know, investors who are dealing with people that are just trying to evict, but there's not really a true law or rule prior to the bill passing where it says you have the ability to evict without going through months and years long as a process. Obviously, that's very expensive as well. And so now having a 24-hour notice, written notice for these squatters to vacate is actually tremendous. Looking on a bigger more broad scale of maybe why Oregon is doing this. I could be totally wrong. This is all just purely speculation.
Yeah.
Is I think they're trying to attract more investors to come into Portland Metro, which is obviously the biggest metro out of the entire state of Oregon, which is actually a good thing. That brings in money, that brings in outside capital, more development, more taxes. And so I think this is a very good thing to see.
Yeah, I about the urban doom loop, obviously, on a previous episode, and the real estate attractiveness of our city and by extension our state. And like you said, real estate investors are certainly looking at the potential hurdles that might come with squatters, that might come with people that just settle up. Now, I'm curious, and I don't know if you know this. So, does this just apply to squatters? Technically, if you let's play out a scenario. You have a lease. Okay. You have a lease for 3 months, midterm lease. And so they're technically a tenant paying you. After that 3-month period, let's say they stay in the home and won't vacate. Does this law apply to them?
It does, yeah.
Wow.
It does not apply to just specific landlords. Yeah. And so this is actually pretty big. That's not getting a lot of media attention, in my opinion, which is interesting to say. But
there's some other things happening. But yes.
For sure. And what was I going to say? Before this, like say I know you guys sometimes run a midterm rental, short-term rental. Exactly, right next door. And so say they decided to not vacate. The rental lease terminated at the 3 months or whatever. They have the ability to essentially fight and play the system before the bill was passed and saying, well, we initially had a lease and now it was a verbal agreement, but there's no way for you to approve if a verbal agreement ever happened or not. And so that's why these legal battles with, investors like you and I, property managers, they hated this. Because the government of, the local governments were always in favor of these squatters and these people trying to essentially take advantage of the system.
Wow. Yeah, it is game changing. We actually, when I was coming up in the real estate world, now almost 3 years, one term I heard quite a lot was cash for keys. And the reason, if you don't know what cash for keys are, basically you have this situation where somebody's not moving out. And because like Phong was saying, the local government is so in favor of these tenants, these squatters, these occupants, whatever you call them, essentially it's cheaper and obviously faster to just go up to these people and say, hey, I will offer you cash to give me the keys and vacate the premises, because it can take months and it takes thousands of dollars. And then you're also thinking about the money you're losing from not renting it. And so this might be $5, $10, $15,000 down the line, and it takes 6 months, if not longer. It might just be easier to say, here's $3,000, leave. So hearing this, whoa, this is a huge change for this area especially.
Yeah, and to just kind of end on that note, you made a very good point. Cash for keys, extremely powerful technique. And I read an article regarding this bill, and it was a pastor that lived around the Salem area. Him and his wife decided to move to Eugene to open up a church and wanted to kind of just build a community there. They enlisted his son to just rent out the property, only temporarily. That son found someone to live in one of the rooms. Other than that lady eventually stayed longer. Because initially it was just, there was no agreements, there was no lease, nothing in writing. It was just a handshake deal. And she decided to stay in the house a little bit longer. She eventually moved into her family within the master bedroom. And then they eventually overtook the entire house. And the original owners that lived in Eugene now, they spent, I think it was like 2.5 years, lots of legal fees to eventually get them out. But it actually ended up sideways. And so they eventually ended up paying that person about $3,500 cash for keys for them to vacate. And then whenever the lawyers of those owners was looking into this person specifically, she has repeatedly done this in multiple occasions where she played the system and just took advantage of just average taxpayers like you and I. So yeah, this bill, it's huge, Wes. I think it's obviously a big picture thing that what Oregon is trying to do, but I think it's very positive to hear some good news out of Portland.
I think it is positive. We talked a lot about how politics can really shape a market, or really shape an area, and to see what I would consider a very right-leaning, fiscally right-leaning law coming into effect here. A lot of times people don't realize that when it comes to these financial things, sometimes you do have to tweak it towards the right a little bit just to hold firm. We all can't be free loving, letting everybody, sleep wherever they want. Go for it. But when it affects someone's bottom line, and I could get somebody from, one perspective saying like, oh, these giant, mega corporations that own billions of dollars of real estate, how's that going to affect them? And sure, but really, when you got to think that I would say most landlords are not that. They're probably somebody that has a duplex like myself, like yourself. They probably own and have saved up money to rent out their previous home, and that is their retirement. And so this really does affect and help people like that quite a bit. So I like it.
I like it too. To finish on this note, I got to ask you one question. Does that mean we're turning red?
No.
You don't have to answer that. All right, well, tell me what's going on in your world, man.
God, your world, everybody's world. Okay, so yeah, let's talk about it. We talked about retirement.
Tariffs. Bum bum bum.
Yeah, we got to talk about it. We got to talk about it because I think it would be disingenuous if we didn't talk about it. It affects the economy. It is the biggest thing that is going to affect the economy that will probably happen in Trump's term, besides a massive war or a massive pandemic. Okay, so basically what happened, and a lot of people know this, is our boy, D. Trump, he's been playing around with tariffs. That's a huge thing he ran on, and so he's delivering on that promise. He's been threatening tariffs for a while, and the market has responded to these threats. He's threatening Canada, he's threatening Mexico, he's threatening the EU, threatening China, he's threatened Colombia, he's threatened everybody. Well, last week, tonight I know when we're recording, last week he came out with his tariff plan. I know in our script practice on Wednesday, one of the first things that was said from some new agent was Happy Tariff Day, because we knew it was coming. And there was a blanket. We saw all the tariffs and where they're going. We have started the trade war. What happened is the thing that really kicked the economy in the butt was the retaliation from China at 34% of a tariff. Now, again, I have to reiterate this. When we put a tariff on a country, we pay for that tariff. Okay? We have always paid for that tariff. Now, there's a point where you could say, okay, if I put because there are tariffs that he had on this list that are 100% tariff, so I'm going to use that for easy math. 100% tariff on a $50,000 car. In essence, that's $100,000 for this $50,000 car, right? If you bought it domestically, $50K. If you bought it from it coming into the country, it'd be $100K, right? So the problem is that the companies will usually pass that on to the consumer. So it's inflationary. The other problem, and what they're trying to hope for, is that in reaction, let's use a car company like Toyota or Hyundai. You have a Hyundai? That's great. Well, guess what? Hyundai had its greatest quarter ever in Q1 because everybody rushed to get these cars before the tariffs came in, because the people that have money know that once that tariff comes in, that car is going to be more expensive. Just add on whatever the tariff is. Hyundai's going to charge you it. So the hope is that Ford becomes your choice because it's cheaper. American made. So the jobs stay here. The money's not going to Hyundai. Korean car, right? Yeah, and it stays locally. The problem is that we don't produce everything here. That's the big issue.
Made in China.
A lot of everything we have comes from China. A lot of produce comes from Mexico. Let's talk about real estate. The building materials for new construction comes from
Yeah.
Canada.
Yeah, I'd say that's the biggest worry that I have, Wes, is construction costs. Obviously, I don't really know anything else about the political landscape in terms of how it affects like the industries, but in terms of the housing sector, I know for a fact it's probably going to raise construction prices in terms of material, lumber, whatever, and that's going to obviously increase the price that these developers and builders put on a new Lennar or Holt Homes home. And so your Holt home that is 450, 500K, it could easily be, 550 for no reason other than the fact that we have tariffs.
And this is a real estate podcast. This isn't a political or economic podcast. So I do want to focus in on it and make it a dialogue with you, not just monologue here. But essentially, I just wanted to get that out about these tariffs, right? We all know about the blanket tariffs. And yes, when it comes to new construction, that's going to get hit hard. These poor developers, man, they have been hit in 2008. They were hit from the pandemic, and now they're getting hit yet again by these tariffs. And like you said, so if you look at a map of where the wood comes from for us, it is like all Canada.
I didn't know that. That's actually pretty interesting.
I'll have to look this up when you're going, but I am gonna stake that 75+% of our wood comes from Canada. I'm gonna go on that. But what I do want to talk about while I look that up and have you talk about it, stocks. Holy
Yeah.
crap.
Yeah, the stocks are down. Great time to buy, but to really finish up on the real estate real quick is I think there is a little bit of light to see. And that light is I think what you mentioned we weren't recording was a decrease in interest rates due to the bond market. And so I think we should at least touch up on that. Like we're already seeing rates. I think at the beginning of the year, rates were I mean, even into last winter end of last year, rates were around 7%, and it kind of stayed that way. It went up to 7.2, 7.5, but now we're starting to see a downward trend. We're at 6.75 as of today, like you checked. And I think last week we saw as low as 6.5. And so I think there are some positivities, but I think what I wanted to reiterate is this positivity is all short term. I think the long term, bigger scale of this is how much will it affect real estate? Will this unaffordability crisis increase where it drives homebuyers, our clients, and even millennials and young generation Z and X? How are they going to be able to buy houses 5, 10 years from now if things are just so expensive?
Yeah, no, there's always going to be jobs that are very resilient that aren't really going to be affected by this. Obviously, domestic companies should be fine, but we we're seeing a loss of assets from the stock market. But yes, you mentioned something. The interest rates went down. Anytime that we have a recession, anytime that we see this huge dump in the stock market, it is directly correlated with better interest rates and the bond market getting stronger. I think the easiest way to think about it too is there's all this money that people have, and they go, where do I need to put this money? How do I invest this money? And you have a few choices. The stock market is a very popular choice. The real estate market is a very popular choice. Or bonds. It's another popular choice where you can put your money and invest it so that eventually that money becomes more money. And you're yet again, trying to outpace inflation with these investments. When the stock market crashes 25%, if not more, people move. The reason it's crashing is because people are selling this. They're selling because they're scared of the market crashing, which is funny because when they start selling it, it crashes the market. So they now have all this free money. Where are they going to put it? Usually into bonds or usually into real estate. So that's why we're seeing the interest rates get better because of this.
Agreed. And I mean, it's short term investing, which is typically through the stock market, versus bonds, which is usually a long term play. Obviously, we all know real estate is a long term play as well. And so you made a very good point.
I do want to correct. So I saw the statistic real quick, and we can keep talking about this for Canada. So 84.3% of all softwood imports are from Canada. However, lumber, like we still use 72% of lumber from our own forests. The rest is from Canada. Now, hardwood versus softwood. I mean, it's a lot of it is from Canada. So let's just say that that's
I would say I mean, still, Canada is the biggest proponent of construction costs.
the thing you also mentioned. So I don't want to bob and weave too much here. I kind of want to stick on that one topic. Sorry to tangent there about Canada. The affordability that you were mentioning, like obviously, so investors that have been around long enough, they say that recessions come roughly about every 10 to 15 years. You can't keep soaring towards the sky. Icarus will fall. And the people that have the capital and the cash buy the dips, right? They buy low and they sell high. And that's where they make money. And so the people that have the cash to purchase right now these stocks, they will probably come back. There's a high likelihood they will. But it also goes the other way, right? Of a lot of people are moving in their money into real estate because they don't want to see this come down, because a lot of wealthy people also borrow on their stocks, right? They borrow on their portfolio. And something that really sucks is if you're about to retire with your 401k.
Yeah.
Whoa.
Yeah, that's going to be tough.
I put an offer in with my aunt over this weekend. We went pending last night, and she's a cash buyer, and she sent me a screenshot of her bank statement as proof of funds. Had a certain amount. She had to send me an updated one this morning because she called her broker and she said, "What the fuck should we do?" He's like, "Honestly, if you're looking to buy this house, you got to sell this." She lost 40 grand in one day from her portfolio, which is just not nothing. So for these people that rely on this as if they're retired, those are the people that I fear for the most. That are retired, that see this 25% dip. They're 65, they're in their 401k, they're like, I just lost 25% of my money. Maybe they don't have the time to wait for it to bounce back.
Yeah, I mean, this is their nest egg. I mean, their stock market from K, even if it's a house that just they're trying to downsize, like this is they don't work anymore. So this income is their income, and so the fear like that they have in their minds and their eyes is like, well, shoot, if I just lost 40 grand, how am I gonna just buy groceries for the next 15, 20 years or however long they're
Makes them think about, should I buy this house? Should I use this money? Now, at the same time, I think I like the light at the end of the tunnel that you're given here. It just goes to show y'all, real estate's the most resilient asset out of all of them.
Yeah, I mean, let's look at 2006, 2008, the Great Recession, where home prices dropped nearly 50%. And look where we're at now. It recovered. I mean, during that time of the early 2010s, the first few years, it was like a bloodbath. But there's a famous quote by Warren Buffett: buy when there's blood in the streets.
Yep.
And
Love
so,
that quote.
yeah,
That's by the dip, y'all.
exactly. Stock market, real estate, whatever. And so you make a very good point. I mean, buying real estate, I mean, you're going to see the return of $40,000 that she lost. She's probably going to triple her money in the next few years because of the unaffordability crisis that we're having.
Yeah. And to really cap this episode off, right? Obviously, we talked about this bill, and then we talked about how the tariffs are affecting the real estate market and how it will affect the real estate market. I think basically people are moving their money into real estate and bonds, a little safer of an asset, right? Stocks are more volatile, so you can make more, you can lose more. The other thing that I want to really point out is the interest rates are probably going to be coming down steadily. They came up a little bit today and they were down, like he said last week, but we'll probably see a trend down. Oh, up, down, up, down, up, down, but it'll trend downward. I do want to end this episode with kind of just feeling your vibe on this market because I have my thoughts. I'm active in the market. You are active in the market. What are your thoughts right now when you're out with buyers or sellers?
I think if we look in the past, starting from the COVID pandemic, there was such a craze of buying a house. People were tucked away at their homes. The work from home environment came big time. So people wanted to buy. We saw appreciation of anywhere between 18, 22%, and then the turn of the interest rates in mid 22. That was the shock. I'll always reiterate, I think the shock is over. And I think people are becoming more educated because of podcasts like this, The Deal Breakdown, where they're being educated that it's not really the economy, it's not really the government, but this is really just like, this is what's happening. The rates are here to stay. And if you want to buy a house before you eventually get priced out, then you should buy now. Because the people that were trying to buy back in 2020 and 2021, they're like, oh, I'm just going to wait until prices come down because they were so elevated. We saw 20% appreciation. Look where they're at now. Prices are still elevated. Yes, there is corrections. And so I think people are just realizing that you have to buy a house at some point before prices go higher and higher because of, 10, 15 years ago. I think the market is really good right now. Yeah, I'm under contract on 2 properties. I have a listing that went under contract, and so there is a sporadic spur, but it's also the spring and summer market. Interest rates will continue probably going down, but by fall and winter, rates will probably jump back up. But I think, this is all speculation. I think we're going to land around low 6s. I think it would be shot in the dark if we even go into 5s, to be honest with you.
I couldn't agree more. And that's what I was looking for at the end there, is just kind of your personal experience. As your buyer specialist, work mostly with buyers. I'll tell you right now, I have switched how I talk when I'm out touring. I was out touring quite a lot last week and the week before during our break. And I now tell people, hey, I see homes in the $400,000 to $550,000, $400,000 to $550,000 price range. If they're on the market for 2 weeks, they're overpriced. I see them go like this. I say, if we see a home, we got to go. Things are getting picked up in that price range ridiculously fast.
Yeah, I think that's the hottest price range because it's not a fixer or as is property around the 350 or below. It's also an affordable monthly payment. Yeah, it probably hurts a little bit, but they can deal with it at least temporarily until rates do come down and they can refinance. But absolutely, it's the hottest price range.
But it's even hotter right now. If we talked 2 months ago, so the inventory here in the Portland Metro in January was 3.7 months. The inventory February was 3.2, and then March was 3. So obviously inventory is going down, which means homes are being bought. We're signing more listings. I saw the stat. We signed a bunch of listings, but they're just getting picked up. And so I will reiterate, people are used to these interest rates. And I do agree that I think this year we're just going to be bobbing up and down between 6 and 7. It's just going to go like this between 6 and 7. It's just like normally what a stock does, right? They have their ceiling and their basement, and they usually bounce up and down in that. I really do. This market's wild. It's fast.
Yeah, I think this year is going to be a lot better in terms of just the overall market, the economy versus 24. I think 24, yes, the shock was probably over, but it was still hurting. It was still stinging. And 24 was probably my hardest year in real estate. Like just a lot of terminations, a lot of failed sales. And so I think this year is going to be a lot better. Yeah.
Couldn't agree more. So in summary, look out for that new bill if you're in Oregon and you're a landlord for evictions. If you're a squatter, watch out. The other thing is obviously these tariffs are going to really affect the economy. We'll see how much. It's obviously affected the stock market in the short term. And so we're going to probably see a lot more benefits in the real estate market. So definitely be on the lookout for that. And if you're shopping, talk to your real estate agent because you might need to go see that home fast. Any final thoughts, Fong?
No final thoughts. That was a great episode. Just talking about the current events. Episode 7, right?
Episode 7. And yep, this is Wesley with Mate and Real Estate, your buyer specialist, signing off.
And this is your seller specialist, Phong Tran, also signing off. See you guys on number 8.
Number 8.